Welcome to our weekly market analysis. This analysis for January 25th, 2024. Well, it's going to be an exciting week. We're going to have a full week of activity this week because last week we had, as you know, we had a 4-day trading week with inauguration and Martin Luther King Day. Monday was the official holiday. So, what are we looking at? This week, most of the central banks will be busy announcing what they're going to do with the interest rates. Um, we start with the United States on Wednesday. Actually, we start with Bank of Canada. Bank of Canada most likely will reduce their interest rates. The Fed most likely will be on hold. That's what the markets are anticipating, unless there's a surprise. And I think there's still data dependence and also policy dependent, but we are talking about more of the political policies of the new administration. The following day, we have the European Central Bank, and they most likely will reduce the rates. European economy is not very healthy. On Friday, we will have our uh, favorite gauge of inflation for the Fed, which is the PCE, and the personal consumption expenditure, consumer expenditure. And then, so those are the major economic news, but also we have major earnings, mostly coming from our, there's quite a few numbers of S&P 500s, but specifically from the Magnificent Seven stocks, including we have Microsoft, Meta, we have Tesla, we have Apple. So watch for that. And uh, as you know, President Trump took office last week, and he was not hesitant in fulfilling his promises on the executive orders. What's interesting, we will look at how did it affect the international market and the dollar and or the dollar and consequently international markets and vice versa. So we look at that. And then I would like you to pay attention to our ETF of the week, and especially we have more hearings on the cabinet members coming up. How does that affect our ETF of the week? So as I mentioned, let's take a look at what's coming up. As I mentioned, we have the uh, Bank of Canada coming with the rates on Wednesday. These are the East Coast time. Then Wednesday, we also have at 11 o'clock, we have the U.S. Central Bank, the Fed, which is going to keep the rates most likely the same. And then on Thursday, we have the European Central Bank. They're going to announce their uh, interest rates, as well as on Friday, as I mentioned, we have the core PCE, which is important. Markets pay attention to that. And then we will have a slew of a lot of these central bankers will start talking um, as far as their impressions of what's going on there and what their outlook is. So as we can see, the rates, the 10-year notes, they had a little uh, uh, well, break. They have come down a little bit. They're flat. Again, they're waiting for many factors, including what the central banks are going to do and what is the U.S. policies. But what we see, though, as far as the yield curve, now we can witness the steepening, and we are completely out of our inverted yield curve that we had last year, if you notice. So the spread is getting larger. We are at 35 basis points. So uh, again, the idea was whether we will have a recession. And I've said it before, I think the recession was more sector than the complete. So anyway, as far as that goes, that's what the yields are telling us. So what kind of a week did we have? Well, the enthusiasm continues with the new administration. The Dow was up 2.15%. They hit the all-time high on Thursday, and the and this is actually again the 52 weeks high as well, which is the year to date, not the 52 week. This is for 2025. But anyway, they're only 0.32 from that high of Thursday. NASDAQ was up 1.65% and S&P was 1.74. So you can see that Thursday was an important day for the so far in January. As far as the gold, it was up nicely, 1.45%. And as we will see what happened to the dollar, copper was down, and then crude oil was down 3.64%. Now, one of the major reasons we talked about, there was a supply and demand. Demand is going to be has been slowing down, and we will discuss the crude oil in our upcoming webinar on the following Saturday. So we'll see what is going to happen for crude oil this year, or what is our outlook. But also what President Trump announced in Davos it was virtually, mentioned that how he will ask like Saudi Arabia to start, increasing the supplies. And so that was a weekly effect on that. So as a whole, the markets were up 1.72%, the stock market. But what you see is the growth was really ahead of the value. And basically, we can see that in mid cap, we see that in large cap, and we see that in small cap. As a whole, we see that the large caps were leader at 1.75%. And when we look at the different indices, you can see this nice movement in the last couple of weeks after we bottomed on the January 13th. So we can see S&P and the Dow, the NASDAQ, the Wilshire 5000, they all have surpassed their 50 and 20-day moving averages. The other side is the dollar. You can see exactly the same time the dollar had been coming down. Also, the yields have been coming down. So you can see the relationships and inverse relationships between the rates coming down, the dollar coming down, and the stock going up. So there's kind of a little relief rally here. And we see the commodities also have taken a little breather, but they're way ahead of their 50 and 20-day moving average. We see golden cross, the 20 has moved over 50. One of the things I did, I looked at the MACD. So we are looking at the strength based on MACD. What we see is the strongest one. We see the Dow and the S&P and let's see and the Wilshire 5000 are strong. We see gold has been nicely moving up, but the crude oil, we see the MACD crossed negative. The commodities, well, there's a challenge. We've got quite a few commodities, so we see the index is about to break down to the negative, and the MACD hasn't done it yet. And when we look at the sectors, we see again the strong ones. We see the discretionary, we see the communication positive, we see the technology. Look at the industrial. They're all broken above their 20 and 50-day moving average, but the basic material is parking itself right on the 50-day moving average. Energy is taking a little breather. We notice what happened with the oil. And also what we see is slow movement on our defensive sector, the staples, and then the healthcare has had a nice move. So we see the MACD is positive, and we will discuss this in our ETF of the week. Utilities are back above their 50-day moving average, and 20-day financials have had a nice move. So with the financials, we had really good earnings in last 2 weeks, as well as the new administration policies are favorable with the deregulation, especially the bigger banks. So we see this nice move above the 20 and 50-day moving average. the real estate is still concerned about the rates, a lot of other concerns, especially the commercials, and uh, so sitting right under its 50-day moving average. So here's the international. Again, I'm looking at the MACD, which gives us the momentum, the strength. So what is happening? Well, with the part of the executive orders, there were a lot of them. What it wasn't, it was not aggressive tariff policy, although President Trump has talked about, February 1st, the tariffs on China and also selective tariffs on Mexico and then Canada. These negotiations with neighbors in Canada. Well, that affected the dollar. The dollar basically, it was kind of a relief for international markets hearing that, and you can see what has happened to the markets. The dollar has been coming down, the markets have been relieved. So basically what we see, majority of the markets, which were really under the 50-day, even under 20-day moving average, we see MACDs have been crossing, and we see from Austria, uh, Belgium is right on its 50-day moving average. Even Brazil has moved up. Canada just broke above its 50-day moving average. And China now is above that. And you can see there's a major difference what we were looking at 2 weeks ago, up to 2 weeks ago, and now. Look at Germany. Hong Kong still it's flat, it's under 50 and 20. India, the same thing. So there's the weaknesses there. But Italy, Japan, where we're looking at Malaysia and even Mexico. So we see quite a few markets above the 20 and 50-day moving average, and some of them even there's a golden cross is about to happen. So that's what's the power of dollar and policies are. So let's talk about the sentiment. Well, last week I said this is one of the lowest we've seen as far as a bullish sentiment. There was a lot of anticipation, what's going to happen with the inauguration, with the new executive order. So there is a lot of relief. You see now from way below the average of our historical average of 37.5 last year, which is 25.4. Now the bulls have gone way above the averages, and the bears are but a little less than what the averages are. So a lot of neutrals move to the bullish side. As far as it's CNN fear and greed, we were almost to the extreme a few weeks ago. Last week we were at the fear, and now we are at neutral. One thing has stayed the same for months after election, especially, is our euphoria in our city group, and we see it's actually just continuing moving up. So let's look at the charts. This is important to pay attention. As I've said it before, technical analysis could be a self-fulfilling, but it dictates what is the psychology of market, where the buyers are, what is again, their thoughts as far as, the price is the king. The price dictates the markets in the sense that they are the ones who are saying, what is the valuation at this moment? So we've looked at the Fibonacci extension, and this is what goes back to November 18th. So what we did, we looked at from election day, that gap up from beginning of November to the high and then to the low of the mid-November, and we did the extension lines, and you could see that that 6,038 was a magnet. And basically last a couple of weeks ago, we mentioned, watch this. Again, this almost a double bottom, triple bottom now. And what did we do? 2 weeks ago, we went below it and we bounced back. And look, we broke all those, and now we have a resistance at 61.61. So basically, that's a major one we want to look at. But we see that there is a little restlessness. And I think what the market is looking at, you can see the volume is lower than average, is, again, big news is coming up next week. They're looking at what is going to happen with the Fed policies, and they also have the end of the month. So anyway, this is just interesting, how a Fibonacci could give you some of the targets. And again, whether it has any validity or not, obviously algos, which they run, all these programs are almost over, I would say 91 to 95% of the programmings are the running the market. So they pay attention to these things. As far as I also want to look at the retracement and looking at from the high of July to low of August. Again, we're looking at where are we, and we see that that area that we broke above at 100% the top of that July. Once we broke it, we could see we continued, and then we hit our 161.8. That 6007, which I've been talking about, has been a magnet. We came back to 127. That was a support. We broke above that. So we go back to that 61, 61, and 6200. Again, these are not, don't look at these lines as absolute. You look at the zone. So let's see whether we hold the 6007 could be a support. If you break it down, then you have, obviously, you have some targets where the market could go. So especially if you're doing swing trading and doing short-term trading, I think these pivot points should be of interest to you. The other thing is you can see with the Bollinger Band, it was interesting. You see the change. Although MACD is positive, we are overbought, but we are one more day we will be embedded. So we'll see what happens Sunday evening. But we also hit the upper edge of the Bollinger Band, so we need to rest. We haven't broken above it, but that's what it's telling us with the overbought stochastic. The other thing I want to pay attention is two things. Last week we talked about the squeeze. Pay attention to the squeeze. And what happened? Well, the squeeze fired, and here we are. We had a nice run. The question is, generally we get about 8 once it fires, 8 bars. But we are also hitting the 2 standard deviation, and we've hit the all-time high, as you can see. So that's what we needed a little break. So we'll see if the linear regression channel start flattening its slope, and whether we rest a few days after FOMC, maybe we'll resume our upper movement, or again, see what happens with the politics of the things. NASDAQ, the same thing. It's overbought, but it hit its upper edge Bollinger Band. That's why they're flattening. So we need a little digestions. We are, again, concerned about what's going to happen with the central banks next week. But also, we see, again, we had a squeeze, and it fired this past week. And what happened? We went to the 1 standard deviation. As far as the Russell just broke above its 100-day moving average. And again, we're still a little bit overbought, but we'll see if we get embedded on that. And Russell also just fired on the squeeze. So pay attention to those squeezes. You see that the A wave also went positive. So if you would pay attention to these, you could have had a nice short-term trade, although the slope is down, so be aware of that. That could create low resistance. So it brings me to, well, the Fibonacci, the retracement. So we went from our recent high in November to recent lows in January. And where are we now? We are right at the 50% Fibonacci, and we've tried about 3 times to break through that. So this is what you want to pay attention to. If you get rejected, we very fast, we go to 38, and then we go to 23.6. But if we break it, then this will be our ambush zone. So again, that's from the Fibonacci point of view. The Dow also has been strong. We are almost embedded, but we are outside. We were outside the Bollinger Band, but we just came inside. So it looks strong. But like all other indices, watch this. We did have that squeeze, which if you go back last week, I did mention, watch for the squeezes. And here we are. So we went from -2 standard deviation to +2 standard deviation. That's what we are resting. So again, that's what the technicals also help us. And we also talked about the transportation, how important it was to break above the 100-day. It is embedded, MACD is positive, so that's a good news. Also, with the crude oil prices coming down, that's also helpful. So that's good news for the market. VIX has been flat, as you can see, and Bollinger Bands, you can see they are very much narrowing. As you can see, the width is going down. We are oversold by getting embedded. MACD is negative. Again, the VIX is not as important as it used to be, but still we want to pay attention. The one that I pay attention is the VVIX. He's still above, right around 100. So it's still there's volatility and we are oversold. As far as the yields, it has been nicely coming down. We talked about the dollar, but again, there's a little indecision here. So we are waiting to see the language of the Fed. And so we see we are right under the 18, but we are hugging that 18-day moving average and volatility is narrowing. We were oversold, but now we have moved to a little above that. So we are out of that. So basically, it's wait and see. The same thing on 10-year. We see we are above the 18-day moving average. We're hugging it. Volatility, like we talked about the yields. And the momentum is not overbought anymore, but it is turning down. So, but still above 50. And I want to, again, look at an extension of the most recent low and high. So what has happened, we see that basically we are right around 61.8%. We are right in that zone, amber zone, almost at 38. So these are the resistance and also basically your resistance and support. So again, you can see there's a lot of wait and see here. The 30-year bond, similar story, similar momentum. The volatility has come down. And the dollar, after hitting its highs, it has, I mentioned about 110 being a round number. Watch for that. And here we are. We've had come down. Again, this is an important week. We are oversold. So we see we are hitting the lower edge of Bollinger Band. We'll see if we could have a little bounce or we will get embedded. As far as the long term, though, as far as the moving averages, we see we are hitting that 50-day moving average. We're right on the support. But a lot of short term, they are crossing. So let's watch that. If we break through that, then 106.6 will be our next support. The opposite is in euro. Again, the euro, on the other hand, there is a good chance that they will reduce the rates. So that could create a little sell-off because, we are overbought and we are hitting the upper edge of Bollinger Band. When we look at gold, it's moving nicely. We are embedded. The MACD is positive, but we will see in the next chart that we are getting close to that double top, that all-time high of 28.22. So we'll see how that will work. It has been nicely keeping its support at the 38.2. So it's crucial time. Again, we're watching what is from the fiscal policy all the way to monetary policy. As far as the silver, there's again the global demand. It's important, so it is not as strong as gold. We did have overbought last week. We said we are overbought, and that 100-day moving average was a major resistance. The copper had a really nice move, but now we're just sitting right on that 100-day moving average. And but we were overbought. We've taken care of being overbought, but MACD is about to cross. It hasn't. as far as the Bitcoin, I mean, it's been on fire. There's also a close relationship with the stock market as well, with the Nasdaq. So, but we just went to overbought. So we were actually overbought. So we mentioned about watching this Bollinger Band. MACD is positive, but we probably will need some rest, at least go to the 18-day moving average. The other thing we can see, again, look at the squeeze, another squeeze. But what happened is, uh, basically we did hit that that two standard deviations. So we have a support at 20-day. So we might have a little consolidation, and also see what happens next week with the rates. Uh, Crude oil had a very nice run. We mentioned about the sanctions on Russia and Iran. What was the supply issue, as far as not a demand issue, but again, with the and we had the cold weather. So basically all of those, remember, if it's cold, it's everything is taken into consideration. So we did have that, even though it's still cold, the markets have already priced it in. But we are sitting on that 18-day moving average, and especially after uh, President Trump announced, talking about Saudi Arabia and baby drill, which doesn't happen overnight. So it will take time. We will discuss that in our webinar next week. We are at 18-day moving average. So we'll see. The momentum is down. MACD has crossed. So my whole outlook was we will be, oil, that the $79 was really more of an anomaly. So I think that 74 area and 64 area would be the place that the crude oil will be. And even when I'm looking at basically on Fibonacci, as you can see from the low of September and from the high of April, we almost double top. So it respected that. Again, don't look at just the pure line, it's the zone. And now we are, is it possible we broke that 78.6? Are we going to go to that 61.8, which is about $72.96? So we shall see. So let's talk about expected move, which is very important. This week, we actually, again, last few weeks, we've been going outside our expected move. So that tells you the markets are not settled. We did go outside for 3 days. We almost touched the upper edge of our expected move, but we still closed above our expected move. Nasdaq did go out and then came back in, and but still, you see the upper edge of expected move has been touched, and Russell respected it, but upper edge, but Dow was strong, kept outside. We had the bonds, or the TLT, which are 20-year treasuries, they were right in the middle, and then gold again was outside its expected move. Silver respected right around, really unchanged, and then financials very nicely, but then they respected their upper edge of expected move, and energy actually went the opposite way again, the crude oil, and we did go outside on the lower edge of expected move. We talked about the crude oil. We can see what has happened, and we did close outside of its expected move. And when we come to Bitcoin, outside, inside, we just respected it, and we are right inside. Actually, it did go a little out, and then we are right in the middle of expected move. With that in mind, I hope that was helpful. We will move on to our trade of the week. Thank you so much.